Well, that's what I'd like to ask David about. Essentially, the Chinese leadership now faces this tremendous task of altering the dynamics of growth and moving much more to a consumption, a domestic demand-driven economy. How do they do that, and how great a challenge is that?
Okay, so it is a central element of the 12th five-year plan. So it is the case that the Chinese are very aware of this as a challenge and happy to be open about it to the world, that that's something they need to do. And there are, they are definitely making progress in that direction. So if you look at, so one of the things they need to do is to let their real exchange rate rise, and they have done that to a considerable extent, both as a consequence of allowing the renminbi to rise against the US dollar, but also because China's been running a higher inflation rate than its trading partners. So the combination of those two things has actually seen quite a big lift in the real value of the Chinese currency, and you've seen that also in a big fall in the current account surplus that they've been running. If you go back a few years, they were right before the financial crisis, they were running truly enormous current account surpluses as a share of their economy, and those are much smaller. So part of what Michael's talking about of moving away from an export-led growth model involves importing more and as he said, turning to other sources of domestic growth. So some of that's happening, and the other thing that is also happening is if you look at retail trade growth, it's growing pretty robustly. I mean, everything's growing in China is growing robustly, but there's no question that A, they understand this as a need, and B, they're making progress in that direction. Do they need to do more? Yes. And there are a whole slew of things they need to do, including creating a social safety net in order that people feel more are more comfortable about consuming, rather than the enormous savings rate that they have that as a society they've had for a long time.
Okay, well, of course, the Asian story is not just a China story, as has been indicated already this morning. We're talking about a range of different countries here. So staying with David, I wonder, David, if you could just quickly give us an overview in terms of your assessment of the future growth prospects in the region, in terms of deconstructing this a little bit. How much China, how much India, how much ASEAN? And is there anyone else you'd like to nominate?
Sure. Well, there's a nice statistic in the white paper that might be kind of a way of framing this. The estimates are that by 2025, Asia will have 4 of the top 10 economies. China number 1, India number 3, Japan number 4, and Indonesia number 10. So it's not just a China story, although, I mean, China is obviously a big deal. The Chinese economy is expected to become bigger than the United States around the middle of Obama's current term. India has been growing strongly since the early 1990s, and although it's slowed down more recently, the demography in India is much more favourable to growth than it is in China. So whereas China's one-child policy means that their working age population is about to peak, that's not true of India. Although fertility is coming down, there are a huge increase in potential workforce over the next couple of decades in India. I think the worry in India is whether they will sustain the reform momentum that they need, and quite a lot of people are worried that the recent slowdown is a sign that India is not it doesn't have the commitment that they need to sustaining the sort of reforms that are necessary to keep strong growth. I mean, India is fascinating because it has a different growth model than many of the other countries, through IT rather than through manufacturing. And there are lots of success stories in India, and maybe they'll show another way of getting rich. That's the optimistic story, that there isn't just one path, heavy manufacturing, to getting rich in the modern world. And they have leveraged their English speaking and their time zone to be extremely valuable as a partner for all sorts of Western companies in terms of IT. I think Indonesia is also a success story. After a devastating Asian financial crisis in which they were hit worse than just about anyone else, they've democratised, and they're a very big population centre. I think they're the 4th largest population in the world after China, India and the United States. And they've been growing strongly basically since the Asian financial crisis, and there's lots of, and they are particularly important to us, obviously, because they're right on our doorstep, and there's a lot of two-way trade, and for that matter, a lot of two-way people-to-people movement, with lots of Indonesians coming to Australia for education. So it's definitely a multifaceted story. Indonesia is the biggest economy in ASEAN, but there are 10 economies in ASEAN. So there's not one Asian story, there's a multitude of Asian stories.
Well, I think at that point I might move on to John now. John, you were very optimistic about Asia, but are you optimistic about all parts of Asia? David's just made the point that the Indian growth model is different. It has a different model, which raises all sorts of questions. There are a number of questions to be raised about Indonesia. So can I just ask you, in terms of providing a more nuanced outlook across the region, what's your assessment of where the really bright spots for optimism are, and where the doubts might lie?
Well, look, if I can start at the top. As you said in the introduction, I spent 7 or 8 years in Japan, and albeit that's one of our largest export partners and still one of the world's largest economies. I mean, that is an economy that remains very challenged, and if you wanted me to summarise that, I would say that it remains challenged and has been for the last 10 years because of an absolute lack of appetite for microeconomic reform. So perhaps we can just all take that on board. I think that China is hugely opportunistic and a massive opportunity for us, particularly in the financial world. What we have to get right, absolutely, is being large in the renminbi, as that becomes an important and potentially even a reserve currency. However, in defence of India, what I would say is that 10 years ago, India was a country in which Deutsche Bank made no money, and today it is our most profitable single country that we operate in Asia. And albeit that growth seems to be relatively volatile between, say, high 8s and low 5s, we remain optimistic about India, Paul. I think one of the challenges they've got there is the structure of business. It tends to be very family, orientated. It's a bit like some of the challenges Australia and New Zealand have had in agriculture, where it's sort of been cooperative, so cooperatively driven. So the question is, how do you tap into global markets, and how do you really access capital to drive reform in India? And of course, the other element there is government and the bureaucracy. But we continue to see enormous potential in India. Indonesia as well is a place that I think that most people in the financial community are very focused, A, because of its enormous resource base, and B, and in that sense it's a competitor to Australia, but B, a population of 250 million, a lot of whom are going to move into middle class over the next decade or so, represents an opportunity for value-added services as well. And then it's very hard. I mean, it's hard to go. I won't go through the region country by country, but we operate in all 17 countries in the region, from Pakistan and Sri Lanka through to New Zealand. And if we were to put it all together, we would say, frankly, in Asia we see aggregate growth of sort of 6% per annum, and in the developed world we're looking at, depending on how European focused you want to be, 1.3 to 2. So in a relative sense, it looks a hell of a lot better than many other parts of the world, Paul.
Yeah. Okay, I'd now like to shift the focus of the discussion more towards Australia and look at our prospects for optimising our situation given the broadly universal view of the panel that Asia is going to be a good news economic story for a long period of time. And essentially the white paper is premised on the idea that we must move beyond mining and resources towards a much deeper economic integration with Asia, particularly given the middle classing of Asia and all the opportunities that that will create.